Warren Buffett, for example, has long said he missed the Amazon story. Now Buffett telling CNBC that Berkshire Hathaway, known for value investing, has been buying shares. So does that change how investors should perceive Amazon? With us now at Post 9 with his thoughts, Pulitzer Prize-winning New York Times columnist Jim Stewart. He did say, of course, it wasn't his purchase. It was a couple of his other guys there who run a good amount of money on their own as well that bought Amazon shares.
Yeah, that was interesting that he said, well, it's not really me. But then he turned around and said, but they're still value investors, and on all these different metrics, it's still a value stock. I was a little taken aback by that because I was kind of scratching my head. Well, just what would those metrics be? I mean, I kind of like went through them, you know, statistically, and I was having trouble finding any. I mean, certainly you don't look for earnings at Amazon necessarily, but the PE, even with their good earnings report last week, is over 50. You can't call that a value stock, I don't think. So revenue, which is, you know, for the tech companies, is the big metric. Looks like it's about 4, but you know, if you want to see a value stock, look at Walmart. The price to sales metric there is like 0.5. It's certainly lower than 1. So I don't think we can call that a value. I have trouble putting Amazon and value in the same sentence.
So what's going on at Berkshire then? What you know? I mean, they have typically shied away from some of these big technology-related stocks that obviously have higher rates of growth than some value, and they've lagged as a result.
They have definitely lagged. And, you know, look, I think there are 2 possibilities going on here. One is there is a case for, I think there is a good case for Amazon. I don't know if I'd make it a value case, but let's say you can make a value case for it. We could talk about it a little bit more. But secondly this is what makes me a little nervous. This is a long period of underperformance by value, and we've seen those before. And when the value investors start throwing in the towel, is exactly when typically value starts coming back. It reminds me so much of, you know, the 90s, when you know, the value investors were down and out, and just when they capitulated is when it came back. So, you know, that makes me a little bit nervous. I hope they're sticking to their value philosophy. That said, there's a lot I like about Amazon. I think they've got, in a Buffett way, they're building a moat. He loves moats. He loves barriers to entry. That's really been his hallmark when he looks for stocks. I think you can make a good case there. And they've got a big addressable market still. They still have plenty of room to grow in some of these fields where they're moving in.
Some people say it's a sign that value investing is dead.
Well, that's the minute I hear people say value investing is dead is when I think it's time to buy some value stocks. Listen, I'm old enough now that I've heard this many times before. That's the funny thing about value. I never actually hear the growth people say, oh, growth is dead. Never. Even when they're at their lowest levels, they're like the die-hard optimists. But I think growth people as a group are kind of pessimistic anyway, so they're always seeing the storm clouds. And then, you know, again, they've been battered now for many years. They've been out in the wilderness, and I think that's exactly the time when they should stick to their philosophy. Now, I am fascinated by the Amazon thing. You know, the Google leveling off, this whole idea that people are searching on Amazon. I never thought anybody was going to dent that Google network effect of having the most algorithms, the best searches, the best search results, and suddenly a lot of people are going to Amazon. So I've been testing that lately, and the great thing for Amazon is that it's shoppers who search on Amazon, and that's the most valuable ad target.
In that they already have their wallet out.
Yes,
in a sense.
They're about to make they're going to make a purchasing decision. So that is the super valuable searcher. I mean, if you're looking for, you know, abstract information on, say, you know, Chinese tariff policies or something. You know,
when is Jim Stewart's birthday?
Somebody who's trying to sell you a mattress is not going to like jump on that keyword, you know. But if you're like looking for the product, I mean, you've all experienced it. You search for a product, and then suddenly you get the targeted ads that are exactly what you're looking for. And there's no question that it's faster to go to Amazon. You get the things right away. You push a button, you get the product. But you don't get the array, you don't get the variety. If you really don't know what you want, I still find it's better on Google. But I can see that Amazon is making some inroads there, and I can see why.
Yeah.
And then there's the moat. I think the delivery thing is fascinating. Again, Whole Foods is fascinating to me because I thought, I don't get that really. That's exactly why Amazon moved into that. But if they can really perfect the home delivery, that is a huge convenience. And if you're in the network, all you do is tap on your phone. It gets paid automatically. It's seamless. The staples, you don't need to go squeeze a carton of milk.
No.
And it's heavy.
Yeah.
You don't want to carry the thing either. So there's a lot of potential there, I think.
You like Amazon. Maybe
I like
not as a value
No,
stock.
I call it.
And you haven't even mentioned AWS, which is by far the most profitable
exactly.
and fastest growing part.
Well, that's the part that I'm sure Warren Buffett and I don't understand quite as well. But I call Amazon, what do they call it, GARP, growth at a reasonable price. And if they can keep boosting earnings the way they did, then it's going to be pretty reasonable.